In today's video, I'm going to show you the most accurate 1-minute scalping strategy I have ever tested on my channel. This strategy is very simple, not requiring a lot of experience, but it still makes a consistent profit. This strategy will work on all markets with high levels of daily volume such as Forex, crypto and commodities. I'm also going to be backtesting this strategy 100 times to get the real numbers behind it. Alright, let's jump into TradingView. Okay, so for this scalping strategy, I'm going to be using TradingView.com for my charts and indicators, and I recommend you do the same. My chart is set to a 5-minute time frame, but you can use 1 minute, 10 minute, or even an hour. It's really up to you. Next, let's click on the indicators tab and search for the first indicator, which is called the exponential moving average. For this strategy, we need to add 2 of them to the chart, so just click on the indicator twice. And for our second indicator, let's again go to the indicator tab, but this time search for regular stochastic. Now let's install the sessions on the chart. Perfect, now we do need to change a couple of settings for these indicators, which is no problem at all. So double clicking on either of the EMAs and changing its length from 9 to 15. Then jumping over to the style section to change the color to make it more visible. Awesome, now let's access the setting on the other EMA and this time change its length to 150. The next step will be to make some adjustments to the stochastic indicator. So again, double clicking on this indicator and navigating to the input section, we can put all the parameters equal to 5 and then select the specific session we're going to be trading on. Now I found the setup does work best on the London and New York sessions, so I'm going to be disabling the Tokyo one. Now you're probably wondering why New York and London sessions. Well, it's because the market participants are more active during this time. If you look here, notice as soon as the London session opens, the market starts heavily trending in, and after a New York session, the market is usually pretty flat. Okay, we have everything set up. Here's how you trade with this strategy. First, for entering a short trade, we're only going to be looking to sell when the market is in a downtrend. To confirm this, we need to wait for the 50 EMA to be below the 150 EMA. After this, we need to wait for the price action to fall back into the 150 EMA. The price action can either get really close to it, touch it, or even cross it, as long as it does one of those 3. Third, the stochastic indicator must get overbought, and the orange line must cross above the blue line. The cross needs to happen either in the overbought area or really close to it. Next, during this pullback, the price action must not break above the previous key level of resistance. So with all that in mind, this is what the perfect setup looks like. Okay, once we have all these conditions met, we're going to be waiting for the price action to cross and close below the 50 EMA as our final confirmation. We will set the stop loss slightly above the recent swing high with the take profit target placed here at 1.5 times the risk. Now just quickly, I thought I'd show you an example of a short trade that you should definitely not take. You can see here the price action is in the downtrend, which is good, but taking a closer look at this pullback, it's obvious the price actually broke above the most recent level of resistance almost every day. As we can see, the market started making higher highs. In this case, our short setup becomes invalid automatically, so please make sure you're paying very close attention to the market, otherwise this strategy just is not going to work for you. And for reference, here we have an example of a short trade that you should take. The price action pulled back into the 150 EMA, the stochastic indicator also got oversold, and finally a bearish cross. Perfect, so that short trade's done. Now it's time for long positions. So for long entries, we're only going to be looking to buy when the 50 EMA is above the 150 EMA. Then we need to see the price action pull back into the 150 EMA with the price action not breaking below the key levels of support during that pullback. Then we need the stochastic indicator to get to the oversold area with the blue line crossing above the orange line. Now the cross must happen either in an oversold area or really close to it. And lastly, for a final confirmation, the price action must cross and close above the 50 EMA. With all these conditions met, our stop loss will be placed slightly below the recent swing low and the take profit target will stay the same. So here's a quick example entry for a long trade. The 50 EMA is above the 150 EMA. The market started making higher highs and higher lows. We had a pullback into the 150 EMA, the market structure hasn't been broken. We also see the level of support is right here and the price action did not break it, which is perfect. A quick reminder, you should not enter a long trade when the price action breaks below the key level of resistance when it pulls back into the 150 EMA. In this example right here, you can see that the market structure has been broken. This means our setup has become invalid. Alright guys, hopefully you've understood these rules, and if you haven't, of course feel free to replay the video to make sure you fully understand it before continuing. And with that, I'm going to jump into the backtest and bring you guys the results. So 100 backtests have now been completed. The trades are ones I found across the span of about 3.5 months. Now looking at your screen, you can see the incredible win rate this strategy has achieved of 71%. Now whilst this is not the highest win rate I've had for a strategy on my channel, combined with its other stats, it's definitely up there. Looking at our true realized profit, we see it's over 353%, which is just insane. Now you do have to keep in the back of your mind that this is a backtest and doesn't account for platform fees such as trading fees, short fees and account fees. But even with the highest fees I could find, it's still an incredible result. Looking deeper into the stats, we see the profit factor is 3.6, which is not bad at all, and we had 7 consecutive wins against 4 consecutive losses. Now with all aspects of the strategy considered, I would put it in my top 3 strategies on this channel and definitely recommend you give it a go. Of course, always make sure you test it and practice with paper money on a demo account first to ensure you've got the hang of it before putting your hard-earned money into a trade. And with that, this video is done. It was actually one of my favorite videos to create, and I hope that you guys got some value out of it. As always, if you have a strategy you would like me to review, comment it down below. And if you're looking for other strategies, consider checking out this video on your screen now.